So yeah, Arthur, we've not spoken before. It's the first time,
Yep.
but I love your content. Um, we got connected through Kyle actually, 3 hours.
Yep.
Um, yeah, no, like I said, this is gonna be like super casual conversation about what you do, how you view the space, especially DeFi, right? And the series is geared towards mainly builders, but I'm sure there are quite a few investors in this in the audience as well. So the nice thing about having someone like yourself doing this kind of stuff is that you have a as an investor you have a broad view of what this space looks like. Um, Versus having someone like who is more like deeper in the entrepreneurial side of things. They're more like specialized in one area. So I think either way, your insight would be super helpful for the founders. So let's start with maybe your background and how you started I guess define capital, right? So
Sure. Yep. Sounds good.
let's start with that.
Yeah. I think that I'll start by introducing DeFiance Capital. DeFiance Capital is a DeFi-focused crypto fund that combines fundamental research with an activist investment approach. Uh, we focus on DeFi because it's a tagline we like to use. Like Andreessen Horowitz like to say that software is eating the world. We think that DeFi will eat traditional finance at
Right.
least for the next decade. Yep. We started in actually a bit early in 2018, around August 2018. So that time DeFi wasn't even invented yet. So how it all gets started is I left my job in BP, it's an oil and gas trading, uh, to just embrace crypto full time, because once you fell into the rabbit hole, I think that you just feel that you need to give it all. I run a crypto research startup for a while, but after I left, actually I raised a small amount of capital from my ex-colleague, friends and family, and myself. So that's how the previous form of Defiance Capital got started, and we went through the bear market and also the 2019, and yeah, and right until now. So we went through a tough period. The first few months was bear market, but after that, we recover, and we've just done very well since then. So that's how Defiance Capital gets started. And I think that would be helpful for me to share a bit about background. Why am I so bullish on the DeFi since pretty earlier on? I think that
That'd be
uh,
great.
I think that when I started investing in crypto, because I come from a more, like I would say everyone comes from a more traditional background, but I've been investing in the stock market since I was 20 years old. So, I mean, to me, that there's a lot of speculative elements in crypto, but if we want to play a longer term game, then we must know that what are we investing in ultimately. So to me, that crypto, at least most are not stocks. So if you're investing in commodity, like what is the outlook look like? It's a bit like a supply demand driven. But I think that most of the coin will not be able to like capture monetary premium like Bitcoin or even Ethereum in the long run. So that make me think about like what is a real investable sector. So I think that the first major thesis actually come from stable coin, because actually that time MakerDAO was still very early. Then you have a basis, all this thing. But in September 2018, I remember that it was the month that all three major fiat-backed stable coins were launched in the same month. Gemini Dollar, Circle, and Paxos.
Yep.
So I think that that made me extremely bullish on a stable coin, because I think that one of the reasons that Bitcoin didn't really achieve mainstream usage over the last 10 years, it's just too volatile to be used in the day-to-day. People need a stable unit of account and a store of value over the short to medium term at least. So I was very bullish stablecoin. I'm looking for a project that I can invest, that can benefit, that is building a stablecoin protocol and all those things. So that time I think that there was actually a few Maker and the synthetics pre-pivot is called Haven. Terra was actually already launched that time, just not live yet. And Reserve as well. So there was a couple of few. I look at a few, and among the after looking at the valuation, the design, all this thing, I'm just happened to be way more bullish on Haven that time, and I invested in them fairly early on during the bear market. So actually went through a pretty tough time. But I mean, the more research you have done, the more bullish you are on the entire stablecoin sector, because you just think, especially Tether was actually already pretty big. It's just that it wasn't as well as talked as much as compared to right now. So yeah, that's just how the whole thing gets started. And obviously, during early 2019, DeFi as a topic start to get more and more popular, because that's when Compound, Dharma, and the MakerDAO start taking off.
Mm-hmm.
So yeah, that's how the involvement with DeFi gets started. And yeah, the rest is history. But I think fairly early on, I recognized the potential of stable coins. But after that, you kind of realize that you need to build an entire financial stack on top of the permissionless blockchain ecosystem, instead of just money alone. Like Bitcoin achieved a money objective, although it's a bit volatile, but you kind of need the full financial stack to make the entire system work for everyone involved. And I also like to add that, I mean, recently, like we just finished the fund launch and the process. I think it just reminds me once again that why are we doing DeFi? Because this whole KYC AML process is just sucking the soul away.
Yeah. Well, yeah, I agree that like the no KYC thing is one of the most important value prop of DeFi. Not sure how long it's going to last, right? Because the regulators are going to come in. They're looking at DeFi. Actually, speaking of that, I don't know if you have any insight into that area, the regulatory side of things.
I think I'm based in Singapore, so yeah. Singapore regulation is usually pretty light touch, and the regulator take a more cooperative approach. So I'm probably not the best person to ask. I was just reading to the podcast by Castle Island on the Brink about the travel rule and FATF and how it evolved to a current situation. I think that's probably the recommended material to understand more about the regulatory approach. Yeah, but I think that it's still constantly evolving, and yeah, you just have to stay updated and talk to your best lawyer to understand it.
Yeah, I feel like Singapore might be the crypto capital of the world because of regulations in particular. Because in the US, like US regulators are just fucking the space up, and a lot of projects are just moving away. Some of them move to Europe. A lot of them move to Singapore, and well, Asia mostly, but Singapore might be the best, location regulatory-wise. So yeah. I don't know if you feel the same way, but I see so many projects coming out of Singapore.
Yeah, I think it's definitely true in a way that if you are trying to do something innovative in Singapore, they usually come from a consumer protection point of view. As long as you are not trying to do something that scam the consumers or the users' money, that you will not get prosecuted, you will not get charged. Like usually, it will come like the regulator will reach out to know what you are doing, and like to understand more, and before they really try to sue you and charge you. So I think that's one thing that is a difference. So people feel more comfortable launching something slightly in the gray area. Yeah, and if you are trying to do something that can pure DeFi stuff, I think here is also the regulator also trying to understand it, like on how they can regulate it, so they will not take a very hard-handed approach, such as what the SEC did to the Ether Delta. So there was like a pretty landmark case where a decentralized exchange founder was actually bring to court, and set. Not actually, no. I mean, they settled SEC. So yeah, that was something that happened. But I don't think this will happen in Singapore. I think the more likely that even the regulator will reach out to us, and then you tell them that we are non-custodial, we don't hold customer balances, then they probably try to work out a way with you. So I think that's the differences, at least that you don't get a heavy-handed approach. But that said, that they actually just passed a new regulatory bill that if you are providing like a fiat gateway, like what Coinbase is doing, you are you need to be regulated. And actually that regulation is quite restrictive. There's a lot of crypto assets that they can't list. They actually need to get a legal opinion for all those new crypto assets for them to be able to offer this to the consumer. And there's an annual limit on how much cryptocurrency you can buy through a very popular fiat gateway. So if you talk to the local guy that deal with the fiat inflow and outflow, they'll say it's not easy. But I think if you're doing something that is like non-custodial, like a more DeFi relevant stuff, I think it's probably, it's you get a more light-handed approach compared to other countries.
Yeah. No, I agree with that, and definitely encourage the founders in today's audience to explore Singapore as potential space or location to start your adventure.
I would like to add that it's just that a lot of the other major crypto firms have also opened a new office here recently. I think Coinbase is actually trying to open an office already done. Gemini hired a new head of Asia recently in Singapore, and even I think I heard Arthur Hayes is based in Singapore right now. Yeah.
Ooh, Arthur? Oh yeah.
Yeah, BitMEX founder.
Yeah,
I thought he's based in Singapore right now.
Yeah.
A lot of the company are trying to open an office in Singapore. Yeah.
He's really into DeFi these days, which is pretty a really broad question. What excites you right now in DeFi? Anything that comes to mind, right? I mean, obviously it's a very broad question. You can go really like into one specific area or some broad overview, up to you.
I think that this will be very similar to a lot of people. I'm really excited for under collateralized borrowing and lending, or just under collateralized finance in general. There's a few protocol working on it. That I think is one is called Teller, and there's a Union Finance working on it as well. They're all very early stage. And like Aave obviously is one of our major investors. Also, is tackling it through the credit delegation method, which I think is pretty innovative. So I think this is very exciting because I think the skill, obviously a lot of people talk about the need for the whole DeFi to be scalable as well. But I think this is like a more of a technical thing that we can't really force it through. But when we talk about like under collateral finance, it's something that like a pure DeFi founder can really try to solve it. So this is something I think that we do not need to wait for like a technical solution to come up to solve this issue, which is something I'm really excited about, because I think that as more and more people's wealth are denominated in crypto, we kind of have a more and more need to also access the crypto financial system. And so I think this is how the collateralized borrowing gets started. But obviously this is still very limited to the crypto veil. So I think that by allowing under collateralized finance, it opens up the realm, the possibility in a much bigger way that we can onboard the normal user who are not able to use this. So I think that this is where really the so-called, the very cliche bank the unbanked kind of tagline really can get to be realized. I think that it can be done. It's just people need to find a way that is optimal and that you can get started. So I think this is an area that I'm very excited about.
I want to dig a little bit deeper into that because I personally also am very excited about this space, the underclass, because I mean that's the whole foundation of capitalism, right? Being able to borrow money to start your own business, but over collateralization kind of hinders the development of such a capitalist system inside crypto. So you mentioned Aave and you mentioned Teller. I think everyone knows Aave, but I don't know if a lot of people have heard of Teller. But I want to dig into sort of how these different projects solve this problem. Like what is the mechanism of being able to as a user borrow money in an under collateralized way? Because somehow I would imagine that it needs some sort of credit or reputation system, right? But I'm curious how you view this.
Sure. I first of all, I don't claim to be an expert because I mean for all this project I've interacted with, I spent around I think 1 or 2 hours looking at the material. So so far from my understanding, Aave is just pretty straightforward. It's just having a guarantor. Like a credit delegation is actually it's like an off-chain under collateralized borrowing. Like on a smart contract level, the loan is still over collateralized. Just that the borrower is actually the they delegated the loan to a borrower off-chain that might be under collateralized, and the loan is secured by an open law legal agreement. Yeah. So usually what will happen is like in real life, the lender and borrower will already know each other, and the lender is just using Aave as like a lending backbone and infrastructure. So I think one example I can use is probably one of the lending desks, like let's say Genesis Capital. They can use Aave as like a backbone to automate the process. So just say I'm gonna lend this house to trading firm A, and I already have my loan in Aave, and I'm just using it to lend it out to a trading firm A. Yeah, and so we settle it.
It's basically a peer-to-peer system where the two parties know each other. They know the credit, approximately the credit level, credibility of each other, and then they're using Aave as a platform to settle the loan. Yeah. Okay, so that makes sense.
Yeah. Another one is I think Teller. I think they have a way of collecting users' data in a trustless manner and form a credit layer on top of it. Okay. So I think that one, give me a sec.
No worries, take your time.
That is yeah. Let's see. Okay, I think I'll talk about another one. It's called Union. So what are they trying to do is to form a credit union actually. So I think how it will get started is like you have a group of your union member that will basically vouch for each other. So everyone kind of is like let's say you want to join this credit union, you need to be invited by 3 of the existing union member, and for you to borrow any loan, you have to have like a 3 union member that vouch for you and need to stake their kind of some sort of collateral. It can be their own native token, I think, or it can be some other asset to vouch for you, so that in case you default, the union member that vouch for you will lose some of their stake. So that's how it works. But if you didn't lose any money, obviously the union's capital will just keep on increasing from the interest alone. Yeah, and this is how it gets started. And when the web of trust keep growing, hopefully that this will become more scalable. Yeah. So that's one way you're doing it. It's like from a pure credit, a decentralized credit union approach. About Teller, they actually interact with a centralized consumer data to calculate credit risk. So I think they use a cloud-based infrastructure to enable risk assessment for the DeFi industry. So I think they're trying to build like a credit scoring system for the DeFi market. I think that's what they're trying to do. Yeah. So and they will be like an API layer that they can integrate with let's say other borrowing protocol, so that you can pull the data from Teller about the certain users credit data, and then they will generate a credit scoring to determine how much they can borrow. I think that's my brief understanding of Teller.
Yeah. So interesting that, as an investor, you don't have enough time to dig into every single project. You only have a very high level overview. Same thing for me, right? Like I don't know the ins and outs of the detailed working of these various projects, but you do have a high level overview of where the space is going. Where do you think the space is going in the next let's say 6 to 12 months? It's impossible to predict anything beyond that, I think, given the pace of innovation and how crazy things are going. But curious how you think about the next half a year or so.
I think that
feel free to talk about the market, by the way. I'm sure people are interested in that as well.
Yeah, sure. I think that the market is just very excited about DeFi right now. I mean, both in a good way and a bad way. So I think it also brings back the memory of the ICO bubble, because a lot of the team is definitely pivoting to DeFi right now, or just launching new DeFi protocol. And there will be some that works, and there will be some that doesn't work. So, but I think that I think one difference if this DeFi cycle will make compared to the previous ICO bubble is that at least a lot more of the useful innovation will come out of it and stay and provide a longer lasting value than the ICO that just raised money and didn't deliver anything that found product market fit. Because I think it's my thesis that DeFi is the biggest product market fit for crypto. So that's why you say that most of the project that survive until right now, they are mostly the DeFi project like 0x, Kyber, even Synthetics and Aave. They actually all did their ICO in 2017, and they're actually the only few project they found product market fit, because partly they have the right team and the right product, but it's also they are working in the right sector. So if they are trying to work in some sector that you cannot accept the trade-off of permissionless blockchain, at least for now, you're just not really gonna make it work, because the trade-off is too high for you to handle. So I think that that's one differences. Like if I think this DeFi cycle, even like a lot of it will fail, the one that make it will be more sustainable and bring a more longer term value in the future. So I think this one difference. And I think where we will see, I think on a pure market level, I think that a lot of the DeFi crypto will actually replace the old and dead layer one chain, like Litecoin or like Bitcoin Cash.
The market cap. Market
yeah.
cap.
Yes, this from a market cap level. I think Aave is actually the first to hit 1 billion from a circulating market cap of point of view. Yeah. Obviously, like Compound, they hit 1 billion from a fully diluted market cap quite a while ago.
Yeah.
So yeah, I think
if you count Chainlink, fully diluted is already over 10 billion.
I think that's my view. I think Chainlink is actually a category on its own. It's very related to DeFi because it provides Oracle services, but I don't really consider them like a core part of DeFi. So yeah, that's how I view it. But yeah, so I mean, if you set aside Chainlink, like Aave is the first one to hit 1 billion, and I think a lot more other DeFi protocol over the next 6 to 12 months will hit. It will become top 10 to 20 crypto by market cap as well, and it kind of will replace the older irrelevant crypto, like my personal view, Cardano, EOS, and Litecoin, Bitcoin Cash, because I think that this crypto he's just not gonna capture monetary premium over the medium to long term. Yeah, but obviously I think in the short term, like Polkadot did very well, so it might reignite some of the layer one hype again. So that's a bit hard to say, but I think from a pure investable point of view, I think that people are realize that DeFi is more investable, because a lot of the DeFi are actually like a capital asset that there is some form of a cash flow being returned to the token holder, be it in a buyback and burn model or just like a direct reward distribution model. And as an investor, you need to have some sort of a value capture in the medium to long term. I think in the short term, people are happy for the project to figure out the growth first and then talk about value capture. But I think at a certain stage, people do care that what am I investing in? I don't want to invest in in a voucher. I want to invest in some asset that return value to the token holder. Yeah.
Yeah. So here's a question from Jonathan, which is actually the same question that I had. What stage of the market do you think we're in right now? Let's say using like 2017 as the analogy. Are we in August 2017, December 2017, January 2017? What do you think?
I think every market cycle is slightly different, and I do hope that we don't repeat the same price action of 2017 and 2018. Yeah. But I think if you really want me to say, I'll be saying that we are at probably the Q1 of 2017. Yeah, where the smart guy are like up so much and realizing the potential. It's just like all the early Ethereum ICO investor that held through the bear market are just like up around 100x right now, because I think Ethereum did 10x in early 2017. I think it went from $10 to $200 to $300 in 2 months. I think that was a Q1 2017, and that was when everyone wake up that, oh shit, what is Ethereum and what am I missing out? I think that it's the same thing for DeFi right now. It's like Synthetics, Aave, I think it did 20 to 50x in a couple of like 6 months since last year. So everyone's just what am I missing out? Like is this something that I need to pay attention on? I think so. In that way, it's quite similar. Like the market cycle, that the first early major winner bring the attention of the entire market back again. And I'm not sure whether it's good or bad thing, but some of the new deal flow I've been shown, when I look at the investor list, it's all the ICO token fund that has been I'm not seeing them make any new investment for 2 years, and this is the first new investment they're making again. So including all the ICO influencer, and we are seeing all the ICO checklist Telegram group active again. It scares me a little bit, but yeah, this is what am I seeing. Yeah.
I want to call back to something earlier you said, which is that you think the top DeFi products are going to replace the legacy like layer ones, right? But that would mean that these DeFi tokens, they would have to go up 3 to 5x from here. The thing is, I mean, so I can see 2 broad ways for that to happen. One is you get a huge retail hype and then just push the market up without too much change in fundamentals. And the other way is there is an actual improvement in fundamentals. By fundamentals, I mean like users, value capture, that kind of stuff. Which way do you see that happen? Because in each of the 2 ways, the timeline would be very different, I think. Because I feel like fundamentally, in order for users to grow 3 to 5x from here, it's going to take a while. It's not going to happen tomorrow. But the hype can happen very quickly. And so, also this relates to what Greg just asked in the chat, right? So Greg said, ICOs had an obvious broad appeal and simplicity. How can DeFi achieve normie interest?
Yeah. I think that okay, this is I think this is a very broad question. So I think one way to my initial thesis, so when I was my bullish thesis on the DeFi wasn't actually predicated on this whole bull market. I didn't actually expect this bull market to happen, at least not so soon. And I think one of the thesis is just coming from more and more investor. Actually, it's a fund rebalancing thesis, because I think that people have been burned, people lost a lot of money, but there's actually still a lot of holders that holding out their crypto because they lost a lot. They just don't want to realize their losses. So, but I think this can include some of the bigger investors as well. Like actually, there's a lot of the smaller crypto fund holding, I think, less than 5 million of assets. I think that it will come to a point where people realize that all this layer 1 coin, I mean, the one that is not active, there's not much activity, they just don't really capture value in the long run, and they are investing in something that is kind of worthless in a way. So I think it comes from this realization, and this will drive the capital rebalancing from all this non-productive asset to the more productive asset. I think this is probably something that's going to happen over like a medium term, like over like more than a 6 month. It will gradually happen. So people are selling off their Litecoin to buy something like Aave and SNX, all those things. So I think this is what I would think will happen on a slower or on a medium term. But I mean, if we get a massive short-term hype, I think it's also about mind share as well. And I mean, Coinbase is much more aggressive and faster in listing new DeFi crypto as well. And it's the same thing with Binance. So Binance, I think, recently have also picked up the pace of listing new DeFi crypto. And I think one thing about crypto is also about the mind share and attention. So when you look at all the conversation, you look at all the new project raising, it's all about DeFi. And it's not like it's very big difference compared to 2 years ago. Like 2017, the crypto that you went up the most in the shortest amount of time, I still remember, is a crypto called Ryblock. It's called Nano right now.
Yep.
So I think that one did 100x in 2 months.
All the fucking influencers were shilling it, and then it just went up 100x. Fucking hell.
Yeah. So, and you know why it went up so much? The main selling point was low transaction fee, and very fast transaction speed as well. And they say that it's like 1,000x cheaper than Bitcoin. And that kind of very simple selling point, I think in this market it wouldn't fly, because if you say that you launch a new crypto to have a lower transaction fee, I think people ask that. So yeah, you don't really produce fee for the token holder. So your fee to what's the ratio? I think Coin Metric coin a ratio I think it's like a network value to market cap ratio. I forgot what's the exact term.
NVT.
Yeah, NVT exactly. So people say that your NVT is nothing because your network doesn't really generate any fee your transaction fee is so low, then your network doesn't generate any fee. It's actually the same for all the other layer one chain like Coin or even XRP. I mean, the market cap is very high, but the network itself doesn't generate any fee. So the network security is very reliant on the block reward. And I think that in the long term, it might not be that sustainable. I think more and more people will realize that. So I don't think you launch a new layer one coin that just purely your selling point is low transaction fee. You will fly in this market. So if people will be likely launching all the new DeFi crypto, and this will permeate back to the public market because people are looking at on the public market side, let's say I want more liquidity, I don't want to invest in a private sale. What kind of coin I can invest to get exposure to DeFi? And this will likely come down to Aave or even MakerDAO, SNX, Compound. Yeah, so I think this whole mind share and attention is already changing. So this will just continuously pull more and more fresh capital into DeFi compared to the layer one coin. Yeah, and I think that even for layer one, we actually see a pretty stark differences in fortune. I mean, Polkadot did very, very well. And I think, but if you look at it, EOS has not done very well. I think it's just like, I think there's a lot of overlap in the community. Like a lot of the people were hoping that EOS would be the Ethereum killer back then. A huge part of them were from China, but obviously it didn't pan out. But then Polkadot seems way more promising and they get a lot more things right. So there is a lot more hope on the Polkadot this time and the way that people can build different apps on top of it. So I think that even for layer one, it will be a more diverse in the fortune.
So if we can summarize your main thesis is that you're not necessarily expecting a huge bull market or a huge inflow from retail. You're just expecting a rebalancing from the old L1s, the ones that are unproductive, into DeFi, just as a result of a new narrative, and also, of course, based on fundamentals and actual users. So that's pretty interesting. I hadn't thought about it, but I do agree with that view. It's definitely one of the major, I guess, scenarios that can play out. However, the main difference for me between the old layer ones and DeFi is that the old layer ones are, to me, are more like commodities. I mean, you come from BP, so you understand this. Like commodities you cannot price them fundamentally. They're entirely driven by like short-term supply demand. You can model the price in a sort of a short-term quantitative way, like a quantitative model, statistical modeling. But there's no such thing as like price to earnings or price whatever, like price to sales or whatever, right? Whereas the DeFi tokens, they actually there are networks that generate some revenue for their tokens. So it's very hard for me to see a massive change in price without a change in fundamentals, because the market, obviously you have to assume that the market is somewhat irrational, but assuming the market is rational, it's very hard for me to see like a 10x without a change in fundamentals. How do you see that?
Yeah, I think that's true. But I do think there will be a change of fundamentals as well. I mean, I think it's a very crude metrics and like total value lock (TVL). It's obviously not the most important factor for every DeFi protocol, but it's just like it's a metric that everyone can understand it fairly quickly and is the most widely cited the metric. So I think that at the beginning of the year, even if you ask the most bullish guy on DeFi, I don't think anyone will expect it to reach 7 billion. Yeah, and actually I've checked with Scott from DeFi Pulse. They say that there's no double counting. Let's say for the money in Curve and Wyan, so like they are not really double counted when they add it all up. So the 7 billion is actually all like a net capital. So I think even the DeFi bull would not expect it to hit 7 billion. I think everyone kind of like, even in my deck, I was expecting it to hit like 3 billion or 4 billion. So and we are just only at like end of August. So I think that the fundamental did improve very significantly. Like I think Aave have like 1.7 billion of deposit in their platform right now, and they have not even launched liquidity mining yet. So I think that the fundamental is going to improve pretty rapidly right now because a lot more capital is going to get attracted to this space. And like the cash flow part, it might not grow as fast, but at least on the other metric like trading volume or like on a total value log, all this thing, it's going to improve pretty quickly over the next 6 to 12 months. Yeah.
So speaking of total value locked, I feel like, so if you look at the chart, there was an inflection point back in maybe June or May. But anyway, like it was the compound
Yep.
liquidity launching their liquidity mining program. I mean, obviously you can theorize as to why that was the inflection point, right? Like, you know, the incentives attract more users, which in turn increase the total value locked, and then people and investors look at this metric, and then they start buying the DeFi tokens, and then they start speculating in using the DeFi products, right? Uniswap and all that stuff, which in turn adds even more total value lock. So there's like a nice virtual circle.
Yeah.
What kind of do you see another potential big inflection point on the horizon over the next 3 to 6 months, or do you think that it'll just keep growing like sort of a little bit like exponentially?
I think that if I can foresee the inflection point, yeah. I think that like it's just, how should I say? Yeah.
You don't have a crystal ball.
I don't think I can foresee that, because if I can foresee that, then I'll think that I'll make a lot more money. I hope that is the case. I can foresee that, but I don't think I can, because I think it's just way too uncertain. Yeah, I think that more likely that that inflection point already happened, which is compound. Yeah, because I think that it's actually before compound. Actually, a lot of people, even in crypto, wasn't paying attention to DeFi. I think even people like you, I think you know about it, but you didn't spend as much time on it that time. And I think it's probably the same for a lot of, like, let's say Arthur Hayes and all the like even Sam from FTX. I think they all heard about DeFi, but they don't really care or think that it's just way too niche and a very small area that is probably not going to grow so quickly as well. So a lot of people just like been ignoring it, and that kind of like the compound event just make everyone start really set down everything they are doing to really pay attention to learn what DeFi is about. And obviously when they learn about it, they know that, wow, this is very interesting. So crypto is not just about money and store of value, like it can be about finance as well. Yeah. So, and I think that this is the inflection point that have happened, and it's gonna it's gonna drive a lot of attention and capital back into the space. And obviously the return is also like changing people's perception that DeFi will actually outperform layer one coin. Like so I think that inflection point already happened, and I think it's more likely we do a consistent grind up from here, and like you see some of the unique innovative project just keep setting new precedent, and we go from there. Yeah. And I think that on a fundamental point of view, this is probably not on a price level. I think Uniswap being able to process 200 million of volume a day is a pretty major achievement, because it already did more volume, I would say genuine volume, than some like of the second tier exchanges. Or I mean, from a pure spot exchanges point of view. And this is like a pure long tail asset driven exchange, because it's pretty inefficient if you're trading stablecoin around, but there's still a lot of stablecoin volume going through there. So I don't really understand why, but people can use Curve, but there's still a lot of stablecoin volume. And it can also show that there is still a demand to trade long tail asset. And I think this is something pretty big. So it will drive a lot more innovation on the DEX space. People will be wanting to build a more performant and better DEX again. Yeah.
Switching gears a little bit, tell us about your most contrarian view, something that very few people agree with you on. Even some of the most, even some of the best investors in DeFi agree with you.
Most contrarian view. I I have a lot of contrarian view that not contrarian anymore.
Okay.
So I let me
Anything
think about it.
area?
Yeah, let me think about it. Probably we come back to it later. Yeah.
Okay.
Yeah.
Okay. Okay. Well, let me ask a question that Eric just asked, related to your rebalancing thesis, which again I find very interesting. So Eric asks, how do you view the efforts underway by some teams to bridge L1s into the ETH DeFi ecosystem? Does that give an excuse to L1 token holders to keep holding, and does that impact the rebalancing thesis?
I think that one yes yes I mean from a strictly fundamental.
Let me rephrase this question, because I think basically what Eric is asking is, the main DeFi ecosystem is happening on Ethereum. But outside of Ethereum, you have like Polkadot, Cosmos, and Solana, and maybe some other ones, right? The fact that all these, or I guess most of these L1s are at least trying to be interoperable with Ethereum, either it's through dev tooling or ERC20 support, or maybe even wallet interoperability. I don't know. Does it make it more plausible that we're going to have a multi-chain world rather than a Ethereum dominating everything world?
I would say yes, definitely. I mean back to a pure fundamental point of view that I think that most layer one crypto have to capture monetary premium to be valuable.
Yep.
I think actually even for Ethereum, if EIP 1559 is not passed, there is actually not much direct link between the DeFi ecosystem and the value of Ether itself. But I mean, that is a pure fundamental point of view.
Yep.
So I think for other layer one crypto, if you talk about pure fundamental, even if there is they manage to attract quite a lot of the bridge and for the DeFi crypto to bridge into their ecosystem, if there's no link between the value itself, it should not do much to the value of their crypto in the long term. But I think that's not how the market perceives it. I think the market will reward this crypto proportionally. So I think yes, if certain ecosystem is successful in driving a very active DeFi ecosystem by bridging with Ethereum, I think yes, it will make the market more patient in holding the layer one token and possibly buy more into it. So I think right now Solana having some success, obviously because like Serum is building on top of it, and I think Polkadot have their own they're bootstrapping their own web of DeFi ecosystem. I think Akala just raised a new round led by Pantera.
Yep.
So and I think Polychain has been investing in a lot of the Polkadot, all the Polkadot ecosystem project as well. So I think that is certainly one way that the market will move. That if they have a pretty successful and a promising DeFi ecosystem, I think that the market will reward them, and the layer one token might appreciate in the meantime. Yes, I do think so. Mm-hmm. And but I think that the rebalancing thesis is coming from those that really I would say that the Gen 1 coin like Bitcoin Cash and Litecoin that is really money that they can't really build anything like a smart contracting on top of it. Yeah.
Yep. Gotcha. A lot of questions. All right, let's start with Tim's question. Do you have any view on DAOs?
DAOs? You mean
decentralized autonomous organizations?
Oh, a DAO. Okay.
Yeah.
Okay. I think that that is something that make everyone having less sleep. This is my nemesis actually. Yeah, I think that jokes aside, I think DAO is I think it's finally that is actually coming to realization right now, because a lot of the DeFi protocol is moving to a DAO structure, and right now the stakes are way higher, and and also the community is way more involved, because what I found that a lot of the active community member are actually people who survived the bear market, and so they have a much stronger understanding, because during bear market you tend to, if you really are surviving through the bear market. You've done it through building your conviction through reading the stuff, reading the fundamental, all these things. So these people usually have a better understanding of crypto in general. And so I think they bring a much more valuable conversation and contribution to the whole governance. I think for YFI, it's very impressive. I'm consistently impressed by how informed the community is on how to drive the project forward. Yeah. And obviously combined with a bit of meme as well. So I think that I think DAO is definitely having a re-emergence. And I think that this is and finally the stake is higher, so that people are like putting way more effort into it as well. So there's something that's worth governing right now. So I think it's going to continue to grow, although that there's still a lot of details like implementation detail to be figured out. I think that a pure on-chain governance like a one coin one vote, it seems to be a lot of projects just go for this. This is like most straightforward, and but I think that if that you will lead to a situation where the whales are calling the shot. So how do you alleviate the issue that the smaller holder like feel incentivized to participate, because their vote is not going to make any difference? So but it's important to make sure the smaller holder participates as well, because sometimes we see the most valuable input coming from someone that not necessarily holding a lot of token. So I think that balancing this is something that the DAO will need to figure it out. Yeah,
like quadratic voting kind of shit, right?
Yeah, quadratic voting. But obviously right now it's not severe resistance. So that is something that you need to be figured out. But I'm pretty optimistic. I think that we will find a way to solve this. Yeah.
I would also add that there's probably some kind of some regulatory pressure that's helping DAOs, right? Because in order to protect the project against regulatory uncertainty, it makes sense to decentralize your project. The SEC, for instance, has made it clear that, well, not necessarily clear, but they've alluded to the fact that if you're decentralized, then you are less risky as a project, for instance. So that's also an external beneficial factor for DAOs.
Yeah, definitely. Yeah, I think just one small point I want to add is like Vitalik wrote a pretty good article on, like, he called it control as a liability. I think this is something that especially in Europe, you have the GDPR, and in a lot of the place, I think like right now, if you have a lot more control over the user activity or their asset, in some way it makes you not so scalable, because then you need to invest a lot of time and all this thing into all these compliances like KYC, AML. Is just a nightmare. So you might scale faster without having to do all this kind of thing.
Mm-hmm. We're getting a lot of interesting questions. Unfortunately, we don't have a lot of time left, but so I'm gonna pick a couple ones, or maybe you want to pick a couple ones that you want to answer.
Sure. Yeah. Okay, so I think I start from earlier one. Who is competing with SNX in derivative space? I'll say a lot, at least 6, I think. I'm talking about the live one, existing one. I think DYDX is a competitor, because DYDX, they already launched ETH and Bitcoin and Link perpetual swaps, so they already have a derivative product. And then you have a lot of the project that have raised over the last 2 to 3 months, and they are going to launch over the remaining of the year. Future swaps, Derivadex, injective protocol, perpetual protocol. What else? I think there's a few more. MCDEX, yeah. So there's a lot of project that's trying to compete with synthetics in the derivative space. Yeah. And how can DeFi achieve normie interest? I think, like it or not, I think the high APY is actually bringing some people back, because people heard that, oh wow, I can make like 300% a year in yield, and that actually does brings that open up a lot of people's eye and bring them back, like it or not.
I mean, frankly, 8% interest is a big one compared to like leaving your money in your bank account generating 0.
I think that is certainly achieving some normie interest, and obviously the return. I mean, ultimately it's still about price. So people do look at it like a lot of DeFi crypto perform very well. So that actually does achieve some DeFi interest as well. And I think through price is the best marketing. So usually when people invest in something, they will try to understand a little bit more. And I think hopefully that will open them up to DeFi as well. And I think how I do it, like right now when people want to understand more about DeFi, I usually don't tell them to start from investing. I usually try to refer them to all these resources like Bankless and like the DeFiance and all these directory to make sure they understand it first. And hopefully I think that a lot of people are doing it the same way. At least I think that if you talk about the core DeFi audience, like people who are trying to reach out to the more mainstream user like DeFi Dad, all this thing, I think people generally don't try to promote it from like a price appreciation point of view. People are trying to do it on a more educational front because people kind of know that if you're talking about pure price performance, this is not the right way to do it. Yeah, I think at least this is what I see from the DeFi community. Yeah. Yeah. Okay. I think back to the controversial opinion. I just talk about it quickly. So I think my previous controversial opinion is I think DEX is actually able to compete with centralized exchange. And that was a controversial opinion, but right now it's probably not so controversial anymore. Yeah, because I think that you can, even for the performance issue, you can build on top of
itself, right?
Yeah. Sorry?
The data speaks for itself.
Yeah, and even for the pure order book exchange, I think we are very, very close to layer 2. So that there's a lot of project building on Starkware or building on Optimism, or they even use other blockchain as a layer 2. So I mean, I'm not like I'm very bullish on Ethereum and more bullish on Ethereum ecosystem, but it's also because of the community. So I'm not a maximalist in that way. But so I think that let's say for other blockchain, let's say Solana really make it work, and then you can really build a very high performance DEX on top of it. So I think that will make DEX being able to compete with a centralized exchange from multiple manners, and it's also more composable. So this is one way that I think DEX will be able to compete with centralized exchange. Yeah, this is some of the more controversial opinion I used to have. Yeah. So I think you probably pick one. There's a lot of questions.
Yeah. Let me pick one. The last question for tonight. A fun question from Jonathan. What are you currently farming?
I'm farming Curve. I think that's the easiest one to do. One of the easiest one, because it's stable coin. So if you trust the Curve smart contract enough, I mean, actually I shouldn't say this because it's just making my job harder. But anyways, there's so much capital farming.
Leaking alpha.
Yeah, leaking alpha. Yeah. So I think Curve is actually if you can get through the retro user interface, it's actually the one that have and also the smart contract risk. I think it has been audited like 3 times. In my opinion, it should be sufficiently safe. It's also battle tested long enough. It's actually just contributing to a basket of stable coin. So your risk is a smart contract risk that is a sufficiently battle tested. I think there's been live for more than 6 months. I think for Curve, I think March, and you're taking on the stable coin basket risk. Let's say you are doing like the Y token pool. Yeah, okay, that one you're taking the smart contract risk of YN as well. But let's say you're doing like SUSD pool, you're taking on the peg risk of the basket of the stable coin you're holding on. Mm-hmm. And I think the stable coin peg risk is something that is probably much more manageable than the liquidation risk. So compound was a very good place to farm. But I think that if you want to optimize your compound yield farming, you have to borrow and re-borrow again, and so you need to be aware of the liquidation ratio, especially if you're using volatile collateral to farm it. So I think for Curve, you do not have a liquidation risk, so it's much more easy because like once you have the stablecoin ready, you put it into the pool. It's just about collecting it every day, or like not every day. I mean every once in a while. So I think that's something that is easier to do for most people, and this is what I'm doing.
Gotcha. Awesome. Well, I think this was super fun. I personally learned a lot. I think the thing that I will still remember a month from now is your rebalancing thesis, I think it makes a lot of sense. And again, appreciate you coming over to this webcast, and appreciate everybody in the audience asking great questions. That's it. Thank you, Arthur. Thank you, everybody.
Thanks everyone. Thanks for having me. Yep. See you guys.
All right, take care.